Hello guys, welcome to this channel. Today we are gonna study about Elliot Waves Theory. So I was using Elliot Waves for more than 3 years. Actually, it was one of my first ways to do technical analysis. So I wanna share with you in this video, based on my experience and the good things and bad things of Elliot waves. So Elliot waves can be very complicated actually, and also they can be very easy. The basic rule in Elliot waves is like when the price is an uptrend, you have 5 waves. So for example, something randomly, okay, I'm gonna do this in weekly chart, something like this. One wave to the upside, the second wave is corrective, the third wave is to the upside, and also the fourth wave is corrective, and the last wave is to the upside. Please ignore the price, okay? This is just an example. There are some rules you need to follow when you are doing this. First, when you have your first wave here, the second wave cannot break the bottom of the first wave. So that means if the price breaks below here, it's not a wave 2. Okay. Also, usually the third wave is the most important wave, or the most important wave in Elliot Waves theory. Why? Because we don't see corrections, and usually it's the longest wave and the most powerful, and when people they are making more money. So you want to make money based on Elliot Waves theory, you always try to find the third wave, because in this wave you will maybe make good money. And also in the correction here, in the third wave, usually the third wave should be it should be above the first wave. I mean, cannot break this level. If you see the fourth wave coming here and breaking here, the top of the first wave is invalidated. So it's something different. So for now, right now, as you can see here, the longest wave is the third wave, the fourth wave is correction, and the last wave, the price usually is moving slowly, and is going to the upside. But the last wave, sometimes, actually many times, is a failed wave. What does that mean? The price is coming to here and fails to break this area and comes down and gets rejected. Yeah. So that is, like we said in Elliot Waves theory, is a failed wave. So this is the basic rules of Elliot waves. Let me just repeat: 5 waves in the uptrend, something like this, and 3 waves in correction. So for example, let me show you here. You can think about this. This is let's do it in 1-day chart here in 2018, around here, and we have 1 wave, 2 waves. We could say this is the third wave, 4th wave around here, and the 5th wave here. The last wave is around here. Okay. And from here we can say, okay, usually we have 3 waves of correction. So what does that mean? You can say A wave is this one. Sorry, let me do it again. A wave is this one, and B wave is this one, and the C wave is the worst. It's like the opposite of the third wave in the uptrend. Let me do it this. I'm gonna do this. It could be something like this around here. And as you can see here, the third wave is, sorry, the C wave is the longest in the correction. And after that, we can start doing the same count again. Also, you need to understand something. In my personal opinion, Elliot Waves is trying to predict the future. And honestly, for me, I don't have superpowers. I cannot predict the future. After some years using this technique, I realize there are some problems. First, Elliot Wave traders, they like to use Fibonacci levels to count the waves. For example, there are some rules. Actually, I follow some of them, not all. But for example here, if you have in your count here 1 wave, 2, technically speaking, if you really want to follow the Elliot Waves theory, like counting all the waves, you need to count other 5 waves here, and when you finish, you can finish counting the third wave. And for example here, I can say the 4th wave is here, and from here the last wave is 5, around here. But if you see here how traders they validate this, from the bottom to the top of the third wave, usually the 4th wave hits the 3.82 Fibonacci level. Usually 4th wave is like that. Okay, based on you use Elliot waves and Fibonacci levels. From the bottom of wave 2 to the top of wave 3, and after that you will see a correction to the wave 4. And from here you can say, okay, this is wave 4 potentially, and after that you can expect other pump, other move with the last wave. Also, when you are thinking about corrections, for example here, you want to think, okay, where is gonna finish the wave C? Okay, so from the bottom of the wave 1 to the top of the wave 5, the most important level is the golden pocket. I call in this way because for me is the most important, or the most important support in Fibonacci levels is the 0.618, this level, and also the 0.65. This range is the most important, this area is the most important support using Fibonacci levels. As you can see here, the price after the 5 wave here, we saw here the correction. This is wave number A, number B, but you can see it's more sideways. Let me tell you something. Wave 2 and wave 4 and wave B, they could be very complex waves. I mean, they don't have shapes. They could be very, very complex. I don't want to talk about this like very deep, because there are combos, and if you start studying combos in Elliot waves, your trading will be a nightmare in my personal experience. So I want to keep it simple. What does that mean? If I see in a potential B wave, I want expecting sideways, I don't waste my time counting this. Just all the structure here, I will say is a wave B. Simple, no more than that. Let me clean this chart and I will do it again. From here to here, and we have our 2, 3, 4, 5, and our correction is something like this. A, all this structure is B, and here is C. Because I know the way B could be a sideways price action, choppy market, all this consolidation or distribution, whatever you want to call it, I will say is the way B. And also the wave 2, same thing here, choppy market sideways, and also choppy market here, wave 4. As you can see here, I am trying to keep everything simple. As I said, there are many traders, they want to make it everything more complicated, and they are doing this A, B, C, X, A, B, C, G. It's complicated, so in my personal opinion, I don't like to waste my time. But you need to keep in mind this. There are Fibonacci levels, they are extremely important if you are using Elliot Waves theory. First of all, the 3.82 Fibonacci level, and the second one, and the most important one, is 0.618, this area. When you see the price is reacting very good to this level, after you see this level breaks, the first test to the Fibonacci level, after you see a massive pump. After that, other test here, and as you can see here, it's in sideways. So after we finish the wave C, we need to start doing again our count. That's why you are trading based on Elliot waves. There are good things and bad things. Now I explain. You see this chart, maybe you say, oh, it's looking very good, right? Because maybe I can do this. No, the real problem is like you are trying to predict the future, and it's very difficult because, for example, one trader can say, okay, this is 1, 2, but I want to say this is 3, this is 4, and to the moon, right? This is 5. Something like this. Oh my, this is 4. Yes, this is 4. And to the moon, right? To the moon, they say, no, my count is we are going to the moon from here. Because, I don't know. I like to see this. The problem with this system, or this way of trading, traders, they can set targets randomly. The only thing they have to set their targets with their imagination. That's it. They say, okay, this is way 3, 3, 4, and I strongly believe. How many times you heard this kind of things like, I strongly believe this coin is to the moon, right? And my last way number 5 is gonna be parabolic. Based on what? They don't have evidence for anything. But they like to think in this way. So, but what happened after that? Because you are playing like you are Nostradamus. After that, the price said, no, you are wrong. You see? That's why you must be very careful when you're using Elliot Waves theory. It's very good for trading if you understand what you can expect from the market, yes, in the macro time frames, but for scalping, for this kind of techniques, it's very complicated. The only thing I feel like I really like it about Elliot Waves theories is about Fibonacci levels. Because, for example, if you are looking for resistance, in this case, from the previous high from 2017, $20,000 to the bottom, $3,000, 100, as you can see here, and I went short here. I went short, one of my best shorts here. I entered in short here in the golden pocket for shorts because Bitcoin went all the way down, all the way here to test this golden pocket. And after that, I entered in short and I closed my position around here in the next Fibonacci level at 3.82 from $14,000 to $10,000. As you can see here in macro perspective, it's looking very good. It's very powerful, especially when you're using Fibonacci levels. But not because you are using the price testing this price or the level is because you are gonna enter in long or short. No, it's not that simple. Well, you can do it if you want, but after long time you will learn that you have to confirm the price, the price action. You need to confirm, like, find the sorry, you need to confirm like the price is reacting in that area, rejecting or bouncing from there, who knows. So based on this, now we can think, okay, what is happening in 2018? Sorry, in 2020. I don't do technical analysis with Elliot Wave theories. Please don't take it seriously here. Don't take it seriously, this technical analysis with Elliot Wave theories, because it's something I don't follow too hard, because in my experience, as I said, I don't want to play like I am Nostradamus. But based on this count, based on the structure of this Bitcoin right now, I can say, okay, in the weekly chart, as you can see here, we have two choppy markets, sideways action, and we can say, okay, perfect. I will say like this. Okay, this is like maybe wave number 2. All this choppy market is wave number 2, number 3. All this wave here is number 4, and we are now in the process of the last wave in number 5. Where it's gonna run, when it's gonna, what is the next target? I don't know. Based on Elliot Wave theories, it's very simple to do it actually. If we do this from the bottom of the previous move, wave number 3, to the wave number 4, the bottom of the number 4, we can see the 1.8618 is acting now exactly as support, and the bottom of the top of 3.8618, sorry, is acting as resistance right now. Pay attention to the Fibonacci levels. 1.618 and 3.618. As you can see, 0.618, the number, is the key. Every time when you see Bitcoin or any asset testing this level, you will see a reaction, mostly all the time here. And every time when you see 2.618, is this one is around $47,000. Remember, if you watch my technical analysis about Bitcoin, I said $47,000 is gonna be the key level. It's not because I didn't watch, I didn't see the Fibonacci levels, but it makes totally sense. It's around 46,000, almost $47,000. And the next one, the last one, the last Fibonacci level is around $73,000. So in macro time frame, using Elliot Wave theory in weekly chart, based on of this price action, as I said, don't believe me. Don't believe in this technical analysis, because even I don't believe myself this technical analysis. Why? Because it's Elliot Wave theory, and I am just playing like I am Nostradamus. I don't follow this. Okay, but many Elliot Wave theory traders, they are doing that in this way. The good thing about this is like, okay, you will get a better idea where you are right now. That means if this Elliot Wave theory, this count is correct, we will see this is the last wave, and from here, if Bitcoin is the top, $62,000, we will see a correction and other count. For example, right now, we count this from the bottom here, 1, 2, maybe this is 3, or maybe this is 3. This is the problem with Elliot Wave theories. Sorry. They will say, no, this is 3, this is 4, and this is 5. Or maybe they will say, no, this is 3, this is 4, and this is 5. Who is correct? The only way to do that is you can match this with Fibonacci levels. So for example, from the top bottom of the value wave, the wave 2, thinking this is a wave 3, you want to see a bouncing in the 3.82 Fibonacci level. But as you can see here, Bitcoin actually is getting rejected from that level. It's not bouncing from there. So, as I said, in my way, I will say this is not the wave 3. So in that case, sorry, this is not the wave 4. So that is that mean for me, there is a very high probability. In my case, this is the wave number 5. How I can prove that? Maybe if I see from the same level, number 2 to here, to the maybe around here, we will see was very close, not exact, very close to the 3.8. Maybe I can start thinking, okay, maybe this move was the wave 3. How I can calculate this? Well, it's simple. Oh, sorry. There is a way to estimate the potential taking profit of wave number 3 based on the first 2 waves. For example, we can use Fibonacci extensions, and from the bottom of the first, the wave number 1 to the top and to the bottom here, we can see there are many Fibonacci levels, right? So based on this, usually the wave number 3, this is the 1.861, around $25,000. But as you can see here, this wave is not finished until here. So it was an extended wave. So the only thing I can say here, based on this, is it was an extended wave number 3. This is number 5, and this small wave was number 4 and number 5. And now we are in the process of the ABC correction. Of course, as I said, I can be wrong, totally right. Yeah, I don't follow this technical analysis seriously, because based on my experience, I lost many times using Elliot Waves because I was playing like I am Nostradamus and I can predict the future. Of course not, that is not the way. So if we do that, we can expect, okay, from the bottom, if this is the wave number 5, for example, 1, 2, 3, 4, 5, we can expect a full retrace from the bottom to the top. We can expect a full retrace to $26,000 using Fibonacci levels, the golden pocket here. So if we use corrections, ABC correction, because all the correcting patterns has 3 corrections. For example, 2017, number A, B, and C. As I said to you, don't complicate your life trying to count everything the sideways in the shopping market. All this structure is B and C. So here is A, B, shopping market, as you can see, and C. The big question is, if Bitcoin breaks $26,000 based on this, actually my target is 25, around there, in this area, between 24, 25, around here, without using Fibonacci levels. My target actually is $14,000 around here in the long term. In the long term, I'm talking about months. Yeah. So where is the Fibonacci level here? Is 0.78, 6.786 around here. So as long Bitcoin in the wave number 4, or in the wave in this correction, maybe potentially C could be here, around here. I'm not saying it's gonna happen. Please, as I said, again, don't take it seriously. Also, some traders, I saw some traders, they are thinking, okay, Bitcoin is 1, 2, 3, and this is 4. We don't know. They are saying, okay, number 4 could be here, and number 5 to the moon. As long Bitcoin doesn't break $14,000, 13 around here, this area, cannot be exact. doesn't break this level, this count could be valid as well. So as you can see, I show you different ways how to count with Elliot waves, and at the same time I show you why many traders are wrong, because I can draw the Elliot waves in many different ways, right? So some traders, they will see this, some traders, they will see this. Who is right? No one knows. That's why I prefer price action. So, but it's very good in the macro perspective if you wanna catch here. Usually in way number 3, when you see no pullbacks, actually from here, actually this should be around here. No pullbacks here, no pullbacks. You can think like, okay, this is a wave 3. So if we see, the last thing I want to show you, if we are using logarithmic scale, let me change here to BLX. And I want to show you something very interesting I did a long time ago. In one of my videos, I did this. Using Fibonacci levels from the bottom to the top. One moment, I think I did a mistake. Let me check the chart again. I think I didn't do it from here. Yeah, I think from here. From the bottom to the top. Yeah. Why I did this? Because here we have this price action. For me, it was too young. Bitcoin didn't have enough data. That's why I said, okay, I'm gonna use this pivot, the last dip in 2011 to the next to the top, 2013. So from the bottom to the top, using Fibonacci extensions, we can find something very interesting. Look at this. If we see the Fibonacci levels, after that, you see Bitcoin is just bouncing all the time. And when finally, crash from $20,000, crash to all the way down, and look at this, it's always the 2 points, the golden pocket, 0.618. Every time when you see that, Bitcoin is crashing and is testing the golden pocket. Also, other thing, if we are thinking this is a number, the way number 5, we want to see the retrace, for example, from this level to this level. We can see right now Bitcoin is in the area of shorts. That means many people who are following Fibonacci levels, they enter in short, or they were waiting for this area to enter in short, thinking it's gonna be a fake out, Bitcoin is gonna fail. And actually, that is one of my technical analysis. I did my weekly chart last week. If Bitcoin breaks this level, $40,000, because the MA21 is around $40,000, and breaks and close the weekly chart below there, I will say all this move we saw here, it was just a bounce in macro time frames, and Bitcoin it will have a full retrace. Of course, there is a key level. $37,000 is the last hope. If we see $37,000 broken, well, we will see. We can say this was just a nice bounce in macro time frames. But as you can see here, Bitcoin traders, Elliot Wave traders with Fibonacci levels, they are playing this area. Every time when the price is close to this area, they are buying and they are selling here. Fibonacci levels. So the last tip what I'm trying to tell you, I will try to show here is How to trade with Fibonacci levels? Well, it's simple. For example, you know Bitcoin is in correction, right? Okay, so it depends on your time frame. For example, a 1-day chart. In my case, I like to use logarithmic scale. You can use a normal scale. We can do this. So, okay, from the previous low here, this one around here is the last low here. We can do this, and we can see Bitcoin is playing perfectly between this level, golden pocket, and this level. So people, traders, following Fibonacci levels. Why? Okay, first of all, why I use this point? This point is very easy because it is the breakout point. Let me show you here. Here is the support, this area. And please watch my video about price action. Bitcoin went up, broke the resistance, came here, tested, and from here we saw the parabolic move, right? So right now Bitcoin is in all this structure. All this we can think is, well, this structure we can start thinking, okay, we are gonna use the Fibonacci levels from this point, the breakout point, to the top. And as you can see, actually it's playing very good. You buy the Fibonacci level at 0.618 or 0.65 and you can make some profits. Now, as I said, Bitcoin is testing the 3.82 level using this way. So of course, we traders, they are taking profits in this area every time, and they will buy maybe around here again. So technically speaking, the price is in sideways based on just using Fibonacci levels. As I said before, $37,000 is the key level, right? And I didn't use Fibonacci levels, but if you pay attention to this, Bitcoin is the 0.5 Fibonacci level is actually at $37,000, around there. So Elliot Waves traders, what they will do? Well, if they see the price correcting because they are bullish to $37,000, they will start buying in this area, thinking it's gonna bounce. But if 37,000 breaks based on the Fibonacci levels, what is gonna happen? All the full retrace to $13,000, and maybe this time we will see breaking down to lower prices. So if that happens, using Fibonacci, using Elliot Waves theories, we can confirm like this was something like this. We can say finally like maybe this was something like this, and we can see like maybe this one was the A, B, and finally this breakdown is gonna be C. C could be here or could be here, who knows. So well guys, thank you for watching. I hope you can find this video useful. Please let me know in the comments what do you think about this. Okay, see you, bye.